Hi, I'm Dr. Randy Shepard, and I want to thank you for clicking through because we're going to give you in the next 20 to 30 minutes 7 very powerful tax strategies that we actually implement to save our clients literally tens of thousands, if not hundreds of thousands of dollars. So if you're a business owner, we're going to give you the 7 powerful strategies. Thank you for clicking through. And so we're going to go ahead and get started. Let me just go ahead and bring my PowerPoint presentation into it. Again, this is forget the ugly mug on the on the page. But anyways, for if you're a business owner, these are 7 powerful tax strategies that could literally eliminate your taxes altogether or reduce them substantially. So let's get into it. My goal is simply this: I want to save you between $10,000 to $100,000. You might say, Randy, is that really realistic? I mean, what you're going to give me, is that really possible? Well, I'm going to say this in all honesty, that the strategies that I'm going to give today, there are some strategies in here where that we used to save one of our contractors about $448,000 per year in taxes, and his tax liability is going to go up. So I could say probably next year we're going to save him $500,000 and so on and so forth. So is this real? It's real. And so this video is for you. You can download it, refer to it, take it to your CPA, whatever you want to do. But these are ideas that you can share with your CPA, or you can call and talk to us about it. But there are things that you can start today. So I want you to be able to use a pen and piece of paper, write these things down, use the video, let your CPA see it, whatever you need to do, or you're welcome to contact us and talk to us about it. So who is this for? Well, it's for every business owner. Because the IRS says 82%, they admit 82% of all business owners overpay on taxes by $11,000. IRS says that. Forbes says it's more like 93% of business owners overpay. Now, we believe that you ought to pay your fair share, but we also believe the IRS, where they say you're not obligated to pay a dime more than necessary. That's why anybody that can scour the Internal Revenue Code and use decade-old IRS-approved strategies get the advantage for that. And that's how millionaires and billionaires, the true wealthy people, avoid paying taxes, is they hire people like me or teams like my team, and we're looking for ways to eliminate the taxes or mitigate it as much as possible. So if you're a business owner, this is going to be great for you. You're going to love it. Then if you pay over $50,000 per year, boy, this video needs to be close to your heart. It needs to be on your desktop. You need to be looking at it. And you definitely need to be talking to your CPA about this, or calling us over it. But anyways, your CPA isn't, and this is the number one thing. So who's this for? If your CPA is not helping, many of my clients come to me, they say to me, the first thing they say is, I don't feel like I'm getting any help from my CPA. Well, let me defend them. They're great at reporting history. They're very knowledgeable in accounting, and we rely on good CPAs and good accounting and good tax preparation. Do we do the taxes? We'll get into that later, but we rely on good people that can do that. But they don't see themselves as tax strategists per se. There are some that do, but very, very few. So a lot of those CPAs, like myself, I'm not a CPA, but I came out of the tax world being very familiar with taxation, all kinds of taxes, and learning tax strategies, and found that that's my niche, that's my profession, that's what I do best, and so I've been doing it for years. But so this is for people whose CPA is not helping. You want to build wealth. You want to leverage the tax savings to build wealth. You're tired of overpaying in taxes. You want to accelerate wealth. We will get into ways how you can accelerate wealth. We're doing that with a number of our clients. And they're almost shaking with like, I didn't know this existed, you know. But yes, we will talk about some of those things. And for those of you that need a future plan, you plan for the future for your business, how you're going to improve sales. What we want you to do is, while you're making more money, we want to be able to save that money, right? We want to be able to save every penny that we can, so that you can hire more personnel, expand your business, build a building, add to the fleet of vehicles that you have, or maybe line your pockets for retirement and retire early. So if you want to retire early, that's the last one, because that's what we're doing for a number of our clients, and they're seeing that as a viable option to them because of what we're doing. So what makes this different is that it's your right not to overpay on taxes. The IRS agrees with that. They literally say you're not obligated to pay more than one dime more than necessary. So, but here's the problem: most CPAs are not tax strategists. You're relying on your CPA for your books, right? But a lot of them aren't tax strategists, and so that becomes the difference maker. We do those things, and we're looking to the future while they report history. So we're going to get into the 7 strategies, and I'm going to start off with strategy number 1. And as we get into strategy number 1, let me just lay a foundation real quickly, because I know you want to get to these 7 things real quickly. But let me lay a foundation. Let me start by doing this, talking about. Let me tell you who I am. Not that that really matters, but my name is Randy Shepard. I'm 25 years as a tax preparer and advisor. I've done thousands of tax returns, S corps, C corps, Schedule Cs, you name it, all kinds, trust documents, nonprofit taxes, not taxes for nonprofit organizations. They do 990s at the end of the year, and I do some of that. But so I've done a lot of that. But the key that you want to understand is that me and my team, we've been doing this for a long time, and we've helped business owners like you save literally millions of dollars over the years. I don't have the exact metric, but I'm trying to tell you it's multiplied millions of dollars over the year in taxes. So let me just get to the next slide. Let me just create the foundation before we get into strategy 1. Here's why business owners overpay. Number 1, it's just an improper business structure. So we look at structure. That's the first thing we look at. And we'll talk about in strategy number 1 about this issue, why it could be a major thing. Another thing is they're missing valuable deductions. So we're going to get into some of the most valuable deductions you need to be looking at. And then no one is guiding you through the IRS maze and giving you IRS strategies or IRS available strategies that are IRS approved and strategies the wealthy use. We're going to do that today. So that's part of what you get in the 7 strategies. And so consequently, why you overpay is you're simply missing huge opportunities. It's, how much is missing opportunity costing you? That's what you have to ask the question. What is the missed opportunity cost to you when you're not saving taxes and eliminating taxes? So let me give you strategy number 1. Okay, we talked about number 1, the entity structures. Well, a lot of people start with an LLC, a limited liability company, and I recommend that because it does. The limited liability company limits the liability of your sole proprietorship, or basically it limits the liability of your personal assets, is what I meant to say. But if you're a sole proprietorship, you don't have any of that. People can sue you and come after your personal assets. Now, with a limited liability, could they still do the same? It's possible, depending on what you did, for them to breach the veil of the limited liability company. But in most cases, I encourage you to do an LLC. Now, here's the thing on the strategy number 1, an LLC to an S corp. You'd still remain an LLC, but maybe when you get to start netting $70,000 or more, you might want to consider getting an S corp election, which means you're telling the IRS, hey, I don't want to pay taxes as an LLC. I'll still remain an LLC, but I'm choosing to be taxed as an S corporation. So you're an LLC wanting to be taxed as an S corporation. Well, what's the benefit of being an S corporation? Well, that's where you start avoiding a lot of self-employment tax. That self-employment tax is 15.3%. Let's say you got $100,000 as net income. You would pay, if you were an LLC, you'd pay 15.3% of that and all federal taxes on top of that with that $100,000. If you got an S corp election, you're going to save anywhere from, I would say, $6,000 to $8,000 for every $100,000 of net income. So what you would do is set yourself up as earning a wage, and understand that wage has to be reasonable compensation, reasonably compensated to you. So we do what's called a reasonable compensation study, because S corps are required of that. Nothing big, but we do a reasonable compensation study. Let's say in your situation, you net $100,000, but we do a wage of $40,000, right? we do a wage of $40,000, you're paying payroll taxes. You're paying federal and state and unemployment tax during the process. But that $60,000 of net income then becomes a distribution to you. That's not subject to FICA or Social Security or Medicare tax. So you're saving 15.3% of the remaining balance. So if 40,000 on a net 100,000, if 40,000 is in wages and you're paying payroll taxes, and the $60,000 is not subject to FICA, you automatically have a $6,000 to $8,000, and it's predicated on several different deductions, but $6,000 to $8,000 for every net $100,000 of income you're saving just by making that free, simple, stroke of a pen election. Okay, so that's a simple strategy that you could use. You want to make sure that somebody knows how to implement it. I've dealt with CPAs that have never dealt with that. We do late elections, so if it's June, July, August, and you say, hey, I just got this in June, July, and August, this video, and I want to see about changing mine to an S election, we can help you with that. We're very successful. As far as I know, every one of them, I think even as late as October is what I've done, which surprised me. But we get a late election going back to January 1 of that year. We're gonna treat it as an S corp, and you get the benefit of that. So we could help you with that as well. And then we do ongoing monitoring. So we're helping you with that. We do a free assessment call, and I'll explain all that with you. We do an annual program. I'll explain all that with you later. But we give you all the support that you need to make sure that every transition, everything that you're doing is legitimate, IRS approved, would pass an audit with flying colors. We also provide audit defense as well. Strategy number 2 is the accountable plan. I've got a client that uses a large area of their upstairs as offices for a studio. And he makes about $500,000 a year, but his CPA takes no write-off for the house, no write-off for the studio. He's depreciating equipment, but no write-off for the use in his house. So there is no deduction for the use of his office. So we're going to put in an accountable plan. An accountable plan is simply a reimbursement plan. So what's going to happen in his case is we're going to, in order to avoid, we could come up with a lease agreement between his S corp and let's say with him personally, or even a family management company. And what would happen is we could come up with that, but what we're going to do is avoid, it would just create more taxes. And so we're trying to avoid it. So we want to do an accountable plan where we have, hey, the company, the S corporation, is going to reimburse you for the studio that you have and all that area that you're using. We're going to reimburse you for that. We know that you're paying for it. We know you pay for the utilities. We know you pay for all the repairs. We know you pay for everything that goes on in that house. And so a portion of that, a prorated portion of that huge studio area that you have upstairs in this house, we're going to be able to, with a fair market value, come up with an arrangement of what we're going to reimburse you. Here's the beautiful thing of the accountable plan in this particular situation is we're going to make an agreement, and we'll come up with it. He doesn't have to do it. We'll come up with an agreement with the business to reimburse you, and it becomes tax-free income to my client. Tax-free income to my client, tax-free income. And I can tell you, it could be huge, which means he could cut back on his W-2 wages and on those payroll taxes. We're going to get all that back anyways, but he can do it. It's tax-free income, and it's tax deductible to the business. You can do that with car mileage. A lot of times people will just wait and put their mileage on their taxes, but you can also get reimbursed during the course of the year by setting up an accountable plan. We show you how to do it. Your CPA might have an idea of how to do it. And by the way, let me just say this. This is kind of a legal disclaimer that really honestly, I'm not trying to provide tax advice for you. I'm just giving you ideas. So this is not legal advice or legal tax advice to you because I don't know your situation, but it may help you. And so take it for what it's worth. I encourage you to go to your CPA to talk about it. Write these things down. Send the video to your CPA if you want to. But the reality of it is we need to know your situation to see which strategies are going to work best for you. But that's a pretty good strategy, is the accountable plan. So I would encourage you to consider that. Take it to your CPA. The third thing is retirement accounts. Somebody once asked me, Randy, what do you see on a tax return that somebody could do differently? And I said, well, I can tell you exactly. One blank that's always empty is the retirement, the pension, the profit sharing. The retirement accounts are always blank, but people go into business because they want to build their personal wealth, right? So you need to start a retirement account, and it could be a 401k and different things like that, but it reduces your taxable income and it produces savings. So it does two things. It not only reduces taxes, but it increases savings for you. So you can do things like a 401k, a profit sharing plan. I mean, you could save up to around $66,000, I think is what it is this year that I'm filming it. If you have a 401k with profit sharing plan, that can really help you save, that becomes a huge deduction to you. There are SEP plans, the self-employment pension plan, a simple plan, all kinds of things that we could talk to you about, cash balance plans, and the list goes on. But what it is opportunity to not only lower your taxes, but increase retirement dollars or savings for the business or savings for you personally. So just lastly, it's tax deductible to the business. So you get a double benefit. It's not only is it non-taxable income, and it provides savings, incredible savings to you to exercise these retirement accounts, but it's tax deductible to the business as well. So you get a double benefit. Here's strategy number 4, the Augusta rule. It came out of Augusta, Georgia during the PGA Tours. And so the IRS actually allows for this. You can literally rent your home to your business for up to 14 days. And I have people that do training. And what you simply need to do is find out what is the normal cost for renting space. I have a client. They have 65 employees, and they do new hire training. And he thought, what a great way to do this. Bring him into my home. My wife can get involved. All the food that we provide is for free. I mean, it's not for free. I mean, it costs something, but it becomes tax-free to him. What happens is when we create an accountable plan, or we create the Augusta Rule Plan, we create the Augusta Rule Plan as an agreement from the S Corp to the individual or to his family management company that he's going to use this house and rent it up to 14 days. That then becomes, if we send the money to him personally, that becomes tax-free income to him, and it becomes tax deductible to the business. I mean, it's just a great strategy, and people love it. So it might apply to you, but you want to talk to us or your CPA about it. The fifth strategy that I would give you would be hiring your kids. You've probably heard of this. People have all kinds of questions. What about kiddie tax rules? What about labor laws and all this kind of stuff? Look, if you're hiring your own kids, don't worry about labor laws, because they realize you're not going to put your kids in danger. And by the way, the IRS says, look, you can hire your kids even when they're young, 7, 8, 9 years of age, but it has to be age-appropriate related work. I've got some granddaughters that I said, can I hire you because you guys know this video editing stuff? Would you edit my videos for me? And they're saying, yeah, we would love to do that. Well, guess what? You can literally hire your kids or your grandkids, and they can receive up to $14,600 per child, tax-free to them, non-reportable on a tax return for them. There's a way to go around and do that the IRS way, but it can be tax-free to them and tax deductible to me if I do that with my granddaughters, and you can do the same thing. They need to do real work, and it needs to be age appropriate, and you need to log it. So the IRS is not just going to arbitrarily trust you. They want to see proof. So if you're showing a log for each child, they can do it during the summer, they can do it in the evening after they get home from school or what have you, but you get them involved little by little. They're earning some money. They don't have to earn up to $14,600. That's just the upper limit threshold of it being tax-free to them and non-reportable on any tax return. So it's tax-free and tax deductible to the business. And strategy number 6, great strategy. And let me tell you, this is huge. And this is how we helped one of our clients. We've helped a number of our clients with this strategy, though, let me say this. But the one I mentioned about the contractor that saved $448,000, we used a depreciation strategy for him. And he was amazed by it. He was excited by it. I want to tell you, it is amazing. You can Section 179 deduct a number of things. But let me get more into what I'm talking about. For example, I had a realtor that she had a 2010 Cadillac, and she said, I need a new car. I live in one of the largest cities in America, and I travel clear across town. I need something reliable. I'm a single woman, and what can I do? I make a lot of money as a realtor. I said, yes, you do. I would recommend you, if you're talking about your car, I recommend don't buy stuff just to buy stuff for a tax write-off unless you really need it. She really needed it. So she went out and bought a vehicle. I said, make sure it's over 6,000 pounds because it falls under the heavy equipment clause or the farm implement clause. And if it's over 6,000 pounds, we can deduct it. She's going to receive $66,400 in tax deductions, and that's going to eliminate a majority of her taxes on her tax return. There's heavy equipment leasing. We actually have a very unique strategy. I don't have time to get into it, but I call it the equipment leasing or the short-term equipment leasing strategy. That's really a depreciation strategy. And if you're interested in that, it's usually a strategy that is so well oiled. I mean, there's some equipment companies out there that use big, heavy equipment that allow you to become investors at a fraction of what it costs to buy these things. I mean, just pennies on the dollar, and you actually own this heavy equipment at it's crazy. And it can wipe out your taxes. I mean, it can. So if you're interested in an equipment leasing strategy, contact me. This would not be anything that your CPA probably knows about because they're probably not doing this with special, unique equipment companies, leasing companies that have worked out things with banks and have everything set up from a tax advantage perspective. For the leasing companies, it's a money-making opportunity because you're the investor. For you not only get the tax savings and it can wipe out your taxes completely, regardless of probably what it is, but it also earns you income down the road, much like oil and gas does. So the heavy equipment leasing strategy is another one, but again, it can wipe out your taxes completely. And strategy number 7 is simply cost segregation. So if you own a lot of real estate, you might want to consider cost segregation. Now, what is cost segregation? It means segregating the costs of the commercial building or the residential rental that you have. And let me just say this, so for a lot of people, they don't realize this, but and maybe some of them do. You're probably not looking at your tax return, but when you get into real estate, commercial buildings, you have to deduct it over 39 long years. The residential rentals, you have to deduct it over 27 and a half years. The good news is that the IRS agrees that cost segregation can mitigate taxes on a substantial basis because carpet doesn't last 39 years or 27 and a half years. And there's a lot of things that go into within the structure that engineering firms can help you with this. And we actually use engineering firms, and you'll pay $3,000, $4,000, $5,000 to hire these people to come in to help you. But I mean, we've got a doctor that pays over $1 million a year in taxes, owns a lot of real estate, and this is one strategy that eliminates all their taxes. Are they willing to pay a one-time fee unless they're buying more property, obviously, but if they have somebody come in for $4,000, $5,000, $6,000, they're going to save $1 million in taxes or $500,000 in taxes. It's just really a no-brainer. But you're instead taking portions. You're segregating the carpet and a lot of other pieces down to 5 years, 7 years, and 15 years instead of over 39 years or 27 and a half years. So it's a real good strategy. The other thing, it accelerates depreciation enormously. Now, people ask me, is there depreciation recapture at some point? Absolutely there is. So, but for now, and we can deal with that later when we have to do recapture of depreciation. But for now, we won't want to get into that, but it accelerates the depreciation. And we use an engineering firm to authenticate it because the IRS loves that when you have a third-party authentication that's legitimately has an arm's length distance from your property will go in, help you segregate the costs, And I mean, to tell you, I mean, it's going to wipe out most of your taxes if you do it. So these are 7 strategies. And simply, let me just do the summary real quickly and run through it. An LLC to S Corp, an accountable plan, which is a reimbursement plan, retirement accounts, the Augusta rule, which can provide tax-free income to you and tax deductions to the business. Another thing would be, we talked about, is hiring your kids. And there's so much we could talk about on that. Depreciation strategies, a lot we could talk about there, but just refer to these things. And then cost segregation. So these are some of the things that we talked about, and trust me, they're powerful strategies to save you anywhere from $10,000 to well into the hundreds of thousands of dollars. And so I would just ask you, what's next? Is to review this training course. And then I would say discuss options with your CPA, or give us a call for a free consultation. We're willing to help you. Some frequently asked questions can be, can this work for me? I don't know. It possibly could, but these are things that is to stimulate your thinking, get you to salivate on future planning that you discuss with us or you discuss with your CPA. So these are 7 powerful tax strategies that could mitigate or eliminate your taxes that you want to talk with someone like a CPA or myself or our team to see if it's going to actually work for you. Because I cannot give you tax and legal advice just through a video. This may not work for you, but chances are it could work for you, but we'd have to know your situation. Do you file our taxes is another thing that we hear or we're asked. And yes, if you become a client for Tax Strategies and you want us to file taxes, we can do that. Do we have accounting, bookkeeping and accounting services as well? Yes, we use a third party for that, and they're phenomenal, and we work with them. How much does it cost to use your services? I actually say it takes a little bit of an investment, but it's really, in the end, it's free. And let me give you an example. Our assessment fee, you'll pay us an assessment fee, and our assessment fee depends on what actually is going on. So we have a set fee. And it's different for everybody because some people own several different businesses. And so we have to do it accordingly. So there's an assessment fee. From there, we develop a tax blueprint, and then we propose another fee, which is our annual blueprint. And you can choose to do that where we meet with you monthly. And most of our clients want to do that because they want to make sure, and we want to make sure, that we have the outcome that we projected. What happens is a lot of times people get in, they try to do it themselves, but they don't have accountability from their CPA or from people like us to make sure they're implementing the strategies. Trust me, I do this every single day, and you need someone to hold you accountable to make sure you're doing it right and to make sure that you're doing it. So, but look, if I saved you $200,000 in taxes and we charged you $25,000, I mean, wouldn't you do that? I would do it every day, all day long. If it cost me $25,000 to save $200,000 in taxes, I'm not saying that's what it costs, but I'm just saying, I mean, let's look at it realistically. So it comes out as an investment into your business that saves you, in that particular case, hundreds of thousands of dollars. So the only other thing is, the people ask me is, what if this doesn't work for me? Well, we have a work for free guarantee. If the end result is not going to, if we do the assessment and we do the tax blueprint and we realize this is not going to work, we're just going to tell you because we don't want to work for free. But if we get involved and you're paying us and we start working for you and we realize that all of a sudden there's changes, we're going to offer the work for free guarantee. We're not in this to take people's money. We're in it to help people get results. Now, we need to make money, right? So you reward us with the money because we're helping you to save a lot of money. So that's what the deal is on that. So what if this doesn't work for me? We offer the work for free guarantee. And what if I owe back taxes? If you owe back taxes, I've got a forensic accountant. I mean, if you owe back taxes, we've got an accounting firm that can help you figure that out. That's part of our team. And so just let us know, and we can put you in touch with the right person, and we can help you with tax strategy. So why wouldn't you sign up for this? Well, you don't actually need our tax help. You wouldn't sign up. I get that. The other thing is you're afraid of making the wrong decision. That's why we offer the work for free guarantee, is because I want people to be able to do due diligence on us, do due diligence on the strategies. And we're all, we don't do anything that you don't understand. We don't do anything that you don't agree with. And so we want to make sure you make the right decision on everything that you do. That's important to me, very important to me. You may have some unanswered questions after this video. Feel free to give me a call. We've got a free 15-minute discovery call that you can chat, ask me about any one of these things, and we'll talk about it. And, it's all about you. So you can also call me. This is our number. You can call us the number below, or you can click the link below and set up a free discovery call on Zoom where we chat about your situation, your goals, and what you'd like to see us accomplish for you, or what we could potentially accomplish for you going forward. What have you got to lose except the money you're already paying Uncle Sam, right? You're going to lose it anyway. Invest it to save a lot of money and then use it and leverage it as a gateway to accelerate and build wealth.